I can see on this as well. Good morning, everybody. Happy Monday. Hope you had a fantastic weekend, relaxing, de-stressing, or maybe you had some chores to do, or maybe you had to go and visit some relatives, but hope you had a great one either way. Great to have you with us today. And boy, was this weekend popping or what? I mean, even on Friday, we saw Bitcoin break that 10K, that key psychological level that we've been hearing about. Things is about to pop off. And wow, like literally, I was going back and forth, checking out where it was at that point. And I thought even 10,200 would have been the ask, but completely broke through that, flew through that because of the anticipation. The market was ready, and it showed out, right? And in fact, it went as high as what was it, beyond $11,000, guys. And the highest that we saw was 11,246. The average calculated weighted price. You have to consider all the different exchanges that are reporting various prices. Some obviously sell Bitcoin around the world at a premium. We've seen, for example, in Hong Kong, people have been selling their Bitcoins there at a premium as well. So the fact that it went above 11,000, it's within a short period of time. It's incredible. And you can bet your bottom dollar the volume was off the charts too. This weekend was huge, guys. So if you were, paying attention to the new highs that it's been creating so far and how it's been absorbing the pullbacks, the corrections, you'll notice that it doesn't spend enough days. It hasn't even had time. I wouldn't even say like it had like a week of ranging or consolidating or anything. It's just been action, all out action, which is good to see. We don't have to wait long for something to happen. The volatile nature of this asset class is well known. But you guys may not be surprised to hear that a lot of the movements being driven has been institutional money as well. In fact, they're finding it hard because of the lack of supply. With over-the-counter trading transactions, they've actually been going through some level of difficulty trying to acquire large amount of volumes, and this doesn't usually impact exchanges. They try and avoid retail exchanges and whatnot, so it doesn't manipulate the price. It doesn't skew the price on the markets too much. But even institutional players are forced now to go upon exchanges to accumulate Bitcoins. And obviously for some parts of it as well, it has been just the fact where we are in the market cycle, a lot of anticipation as well. When we saw that 6K being broken so easily, we thought at least we'll get, several opportunities to come back and retest that again. But no, it's been flying. It didn't take much of a break. So where we are right now that we're broken 10K and we've seen a level of FOMO this weekend, and believe it or not, there's also institutional FOMO, not just retail. And surprisingly, retail FOMO fully hasn't kicked in, guys. So we've got plenty, we've got some time. Maybe I shouldn't say plenty, okay? We've got some time, but as you can imagine, the reports and developments over the last few days alone, I mean, the year highs being created, new record being set for this particular period in the cycle. And, I think for the year so far, it's added like 300% and I'm talking about Bitcoin here, 300% returns, that's not that bad. I mean, what other asset class right now can bring you 300% returns between January and the 24th of June? Okay, it's crazy. And these are the sort of returns are extremely attractive to institutional players in particular. But again, as I said before, they want to do it on the playing field that's more skewed towards them, that's regulated, that's insured, that's monitored and whatnot, and that there's compliance and accountability. So if anything goes wrong, they're as protected as they can be, and that they have the ability to get compensated, get redress and whatnot. Without having to spend a lot of money trying to, rectify any potential wrongs. So they want that burden to be placed on those market makers, on those exchanges, on those custody solution providers. And so the emphasis and the demand has been coming from institutional players. So this has been an incredible few days, a few months even. And so, the fact that we've got this renewed interest and, bullish sentiments are solidifying now. It's literally within a few days, guys, this is all popping off. And it's just the strength, the intensity of it is what's, been underestimated, even though we've seen this, shadows of this, patterns of this in 2017. It's given us a bit of, a hindsight. It's given us a bit of 2020 vision, so we're still relatively ahead of this. And so even at this point, if there's any corrections, and there has to be at some point anyway, but if we have these corrections and pull back sooner rather than later, it would be much healthier for the market, and it would be more sustainable. The growth would be more sustainable and more prolonged. But you clearly can see today, altcoins, it's a bit of a mixed bag right now, but altcoins are taking a hit, and obviously Bitcoin dominance is a significant high. In fact, it's climbed ever so slightly to 59%. If it crosses that 60, oh wow, 60, 61, 62, and sustains that, it does spell a bit of trouble for altcoins in the short term. The market, as you can imagine, is anticipating the bulls to retest the new record that we've created at that 11,240 something area. So the next area that we're looking to test, hopefully if it keeps that up, keeps the momentum up, is 11,500, 11,600 zone. That's in fact, that area is a high from last year in February. So if it reaches that within a short matter of days, if not even hours, then it's extremely tough for the bears right now. They will get slaughtered if they try and do any shorts right now, whilst there's still momentum in, that there's a wind beneath the wings of the bulls, flying bulls right now, like Red Bull, basically. They say it gives you wings. So right now the bulls are flying, and they don't intend to cut the party short. But even the bulls would be happy with a bit of a retracement so they can accumulate, because clearly what we've been seeing over the last few months is that institutional players, traders, retail investors, hodlers, you name it, people coming in at different points. Some of them have been dollar cost averaging, some of them have been coming in from the cold, from the dark, for the first time since 2017 or 2018, whenever they exited the market. We're getting some of these existing traders and investors coming back to the market because they were waiting for 10K to be broken. As I said before, everyone has a price, everyone has different strategies, And for some, they want to be able to, they would prefer to sacrifice some of the early gains for more certainty, more reassurance that yes, we are in a bull market. Yes, the interest has returned. Yes, the volumes are increasing and being sustained. Yes, the transactions are rising. And within a short period of time now. For some people, though, it can be scary because we've seen some of this play out in 2017. And in fact, if you guys remember, when Bitcoin crossed that 10,000 barrier for the first time, it took just 16 days, 16, guys, 16 days for it to reach nearly $20,000. Days, not months, not years, days. That's crazy. People literally double their money if they came in at that 10K. Congratulations to them. And it was at the height of the mania, at the height of ICO interest was crazy. Everyone was investing left, right, and center at any projects they see. So this time, though, as we keep saying, as I keep been mentioning over and over again, that the level of infrastructures that have been built, the upgrades, the creation of different platforms and networks, the increase in transactions, even during the bear market, the volumes are returning, and all manner of announcements that we've been getting, collaborations. Major household names, major industries announcing their intention to create their own version in the space, or piggyback upon something else, existing services like Ripple, for example, existing coins, and be able to facilitate that and see where it goes, where it takes them, and then make an assessment as and when they need to. So far, people have been seeing, by and large, with the return of positive sentiment within a short period of time. Even people coming in at 8,000, even at 10,000 this weekend, people made quick returns. If you're a trader, that is, even if you're holding coins for quite some time. You just love the fact that you like seeing your portfolio back in the green again. Depends when you came in, obviously, but if you were way before 2017, you're still making profits, you're still at a high. And historically, even though since its inception with Bitcoin, it's actually up overall. It's been making returns. Cumulative returns have been high. So even going back to $3,000 Bitcoin, for those early investors, that's still that's a good return for them. But obviously, people coming in at the top, and if they held on during the bear market, it does remind me of any hodlers that held during, way back 2014. I don't know if there's any of them now, but, way back in 2012, perhaps 2000, even as recent as 2016, 17, before we saw the parabolic boom. If anyone didn't get tempted and still held on, like completely forgot a percentage that they've been holding, never to see it, never to access it, like perhaps even hand it over to their children to create generational wealth later on. There are those that are saying till death do us part, like literally accumulating as and when they can, and will never liquidate it, never sell it, nothing. They will hold on to it. So this is such a nice, when you have the community feeling optimistic and feeling rewarded, feeling vindicated for holding on as long as they did through many, not just this bear market, but previous ones if you're an early investor. So the fact that it's happening so quick again, it is an echo, it is a reminder, and it's another opportunity again. if you've been consistently, even like from the beginning of this year, if you've been, accumulating on the pullbacks, I mean, the results speak for themselves, right? Where we are, if a percentage of it you want to liquidate, that's up to you. If you want to hold on to it and never spend it, that's up to you. All good either way. But certainly, from what we're seeing by, all the metrics that we use to measure progress in this field, it certainly has been bullish. To state the obvious, but it's the strength, the foundation that it's built on has been, has been more resilient, has been added on to. So that's why this, 2019 completely different from 2017. Price-wise, yes, we may have echoes and similar patterns and movements bearing out in a spooky way, like you're going through, it's like Groundhog Day, for some people. The fact is that we are so much further ahead industry wise than 2017, and hopefully more people have learned their lessons during the ICO craze and during the mania that we had towards November, December, that hopefully they're not going to repeat the same mistakes again. But certainly everything has been acting as an enriching factor, not just financially, but certainly wisdom wise and knowledge wise. We know exactly what we should avoid and what we should be working on and being disciplined at. So fantastic to see that where we are right now, Bitcoin is still holding on to its the momentum that it's generated. Well, the bulls, they're pretty strong right now. As I said, they've been impatient for quite some time. So Bitcoin's transaction volume is back at near record highs. Even if you look at the number of unique Bitcoin addresses as well, that's been rising steadily, even during the bear market. And it's getting to the point where I believe it's going to surpass the 2017 levels. And then you have, the fact that you have all these institutional players now looking to get into, have their skin in the game, but they want to have their rules and, basically have their cake and eat it. And there's a real push on the regulatory front. I'm going to mention about the FATF recommendations that they put out in, they had a meeting in Orlando, Florida, just this Friday gone, and they issued these recommendations. I'll touch upon that soon. But you can see from the markets right now, Bitcoin's definitely taking the shine. But if you look at Tron as well, it's up over 5% last time I checked, over the last 24 hours. But it's been pumping as well, and it is fundamental developments that's affecting it in particular. So while you're seeing some of these altcoins bleed out, and you think, even with Bitcoin rising, some of them have been, beneficiaries like Ethereum, that's been going up as well. But in relation to Tron, though, the fact that it's had some positive developments, for example, like Carbon, it's a New York-based fintech startup. They announced that they're going to have their stable coin on top of the Tron blockchain as well. And then you had Tron Foundation, if you remember, previously as well, they said that they released mainnet upgrade as well. And they were going to add something called protocol data check on that as well, and have the event server more faster, more lightweight, I guess. And then, they're focusing more on driving and growing the decentralized, aspect of it, because the dApps that they have, their ecosystems, it's well known that it's one of the best out there. So the ecosystems on that as well, having all these kind of successful dApps on that as well, and trying to create and foster good community behind that as well. that's been affecting its development as well. And also higher daily volumes as well. If you compare it to Ethereum, for example, and also EOS, they've been doing extremely well as well. So Tron holders are really happy with what they're seeing so far, you know, and also, what was I going to say? A lot of people think that with what we've been seeing recently, that it's just to do with Facebook's announcement with the Libra publishing their, what do you call it, their white paper last week, and you know, basically getting to the nitty gritty of what's going to be involved, and all the other partner companies that they're working with, you know, that have basically invested $10 million each to participate in that collaboration. You know, this, where we are right now, there's so many developments coming out that either, and where we are in the market as well, it almost doesn't matter like what names get thrown in there, who comes out with what. It's just Bitcoin, where it is fundamentally speaking, and in the market, how it's been moving, coming out of the bear market, is going to do well regardless. And we saw, even with any bad news, I mean, that just completely got forgotten. Like, yeah, Bitcoin's just, yeah, it's a monster right now. It's a beast. So, you know, although I have to say, with the Facebook issue, and I'm gonna break that down too, because they did have today, they had another job posting, and in fact, for the last few weeks, I believe they've been adding posts for people to join them with specific qualifications and interests and expertise, which I'll break that down too. But the fact that, you know, coincidentally as well, that Bitcoin has actually, you know, created these new highs and skyrocketed due in part with the development of Libra, with, you know, the news that they have all these partnerships, and they're saying that it will launch next year, but then there's concerns that it may not even get off the ground because of the regulatory hurdles. And so, you know, what we're seeing as well is a real pushback, and I'm glad to see that from the crypto community, the concerns that they have, because essentially they didn't really need to have 27 other companies with them. I mean, with their power, with the scale and the reach that they have, they could have simply created another mechanism to be able to help if they wanted to help the unbanked. They didn't need to go through the crypto route. So, you know, they're basically, you know, jumping on the bandwagon. They don't want to be left out, and they think that, you know, that is the next evolution, that is the next area that they can, you know, have dominance over. And it is a strategy to diversify into other areas. And so it is going to act as a, what do you call it, as a boost to our industry. And in fact, we'll see that in Bitcoin's price. And in fact, what it's also doing is, because of the increased exposure, it is driving some new retail investors into the arms of Bitcoin, into the arms of some altcoins, as they read all the coverage and dissection and the, you know, the pros and cons of Libra. Is actually opening up, you know, another, you know, wave of opening up doors for others to come into the crypto space. So this will be their first point of reference, so to speak. So they heard it via Facebook, and then they go in and do more research on it, and perhaps invest and accumulate other cryptos in the meantime. But certainly, you know, some of the pros in terms of helping to serve the underbanked, and we know, like, some places that have high inflation, you have unstable financial markets and currencies, and you know, all sorts of issues that Facebook with Libra, they're looking to solve that. But at what cost? The cost of that is, the fact that they'd have enormous power and control over all our data and financial transactions, and their partners get to see the other, the transactions, and they can adjust their strategies, and they can take action to mitigate any, future risks and whatnot, and they can change to target certain things. And it's scary. It really is to do with the power and control, with something being so centralized and then not even having a good reputation or a solid track record of dealing with privacy aspects and data storage and data mining and all these algorithms that they use to find more and more things about us and follow us and whatnot. All of that, imagine that also will be, financially speaking, on those transactions that occur via the wallet. And, when people are transacting using Libra, the companies, the others are involved, the amount of power that they'll get and control directly or indirectly, because they did pay to play, basically. That's how I'm seeing it. So they're seeking a data professional to work on the wallet itself, Calibra wallet, and they're also looking for policy specialists as well, because, as I mentioned, the regulatory hurdles that they're going to be facing, already the pushback that they're getting, even from Congress. They have a hearing next month. This is still an ongoing issue for Facebook, and whether it'll actually launch or not is still, even though they've given a good deadline, that we can work towards. I don't even know for sure if that's going to even pan out because of the pushback that they're receiving, but perhaps they can adapt certain things, change certain things, and their goal over time, I believe, is to make it more decentralized. But I don't think that will be possible with all these number of other companies that they've partnered up with, unless they've already mentioned that they're going to try and increase Libra association by, their target is 100 members. So I don't see how they're going to try and make this more decentralized, to be honest with you. They're looking at, analyzing their customers' data. They'll be looking at seeing how we're using our wallets and what we're, spending that, these Libra coins on, and how it's funding certain groups, and how certain groups will be gaining power and influence because of that. And so they'll be looking at that, all the new ecosystems that will be driven as a basis, as a cause of, because of the access, the coins that they have, and the ease of use anywhere in the world that they'd be able to have that. They're looking for data engineer. They'll be, crunching these numbers and datas and looking, how best to serve these consumers. They really will be analyzing inside and out, and looking for ways to be more profitable and more efficient, but also, scarily enough, the amount of data, financial data, transactions data that will be acquired via the Calibra wallet, and that the Libra associations with all these companies will have, that is absolutely scary. This is why governments, but also it takes some of the power and control and influence away from the governments as well. And so they're pushing back on Facebook as well. Hopefully with the hearing next month that Congress is doing, specifically on Libra, we will get more clarity. But I expect, with all the time and money that they've invested, and all the people that they brought in, they're going to find a way to go ahead with this no matter what. This is their baby. I don't think they'll be giving this up without a fight. So it really is driving the narrative to, you will definitely hear them emphasize the fact that this will help serve the millions upon millions of people that are unbanked. And so the impact it will have in the developing world, which is great, but at what cost? And there's other ways to help the unbanked without having to give up so much data, power, control, and for it to be driven by a Western, institutional, a Western centralized, massive, powerful corporation, and one of the pioneers, I mean, literally at the cutting edge of technology. And, that is scary to think, the amount of power that they'll hold, not only on the data aspect, but on the financial aspect. What if Libra coin is the only way they can make a living or gain, some type of access or something, and that there's no other means or other infrastructures to look for alternatives? What if they use their influence to bully others into accepting it locally, and only, it could be, the rules could stipulate in this particular area in town, or whatever the case may be. In developing countries, they may say, give us the exclusive access, like no one can use other coins, it will just have to be Libra, and then we're going to help fund everything, set everything up. They might even fund schools and hospitals to bribe particular communities to just exclusively adopt Libra as their coin. And then, there's so many ways they can go about this, so many strategies that they can do. And so, I hope that the developing world will have people will get to them, quicker than what Facebook, the community, the ones that support Libra, if they get in contact, if they reach out to them first, and they onboard them in a way that, their loyalty, their insights, and all the things that they gain, if they get that through Facebook Libra and all the supporters, all the people pushing that, they're going to feel a sense of loyalty. But also, like, imagine your only knowledge and wisdom of the space would be what you got from Libra or from other companies that are centralized. If you don't have the other side of the coin, and you don't understand that there's other coins that are decentralized projects and exchanges that you could use, you don't have to rely on Libra and whatnot. I hope that voice, their access to that will be just as open as the one with Libra. So I hope you understand where I'm getting at. So, I hope Libra's dominance at some point in the future will not have this monopolistic effect on local jurisdictions and countries and communities where they feel coerced in some way, shape, or form. They feel pressured to adopt that over something that's actually better for them, like Bitcoin, like, and not having this narrative that somehow Libra is a real crypto coin, because it isn't. In my opinion, it's not decentralized, and having people hopefully be educated enough to know the difference and go for other projects that are actually of real world value, but also allow them to maintain their control, maintain the advantages of investing in decentralized projects and whatnot. And so this is going to be important regarding how they these job offers that they have. They're looking to get more specialists in as well, not just programmers and whatnot, but those that have expertise regarding policies, regarding regulations, and how to interpret the data, the financial data that they're going to get from Calibra wallet, and what all of this really means, and how they can interpret that and how they can really monetize and utilize it to be able to make it profitable for themselves, but also for their partners that are involved in Libra, excuse me, Libra Association, because they want to be able to have a good track record and be able to use that as a basis to persuade other new, partners to come on board to take them to that proposed 100 members of the Libra Association. And so, they're really focused, they're saying, on creating opportunities, for the billions of people around the world that are excluded from the financial system. But there's already alternatives to that. So that is far more better. And it's who gets there first to those places that don't have that knowledge and wisdom yet. And that is my concern, as many people also share that. And then, how this is managed, how this rolls out. Their team already, they've got some of the best in the world working on these issues. It's just, they're going to find a way to be able to smooth and iron out all these kinks and make sure they're on the right side, and then they're compliant, because they do not need more regulatory problems, as you can imagine. So public policy manager, they're looking to fill that into analyzing all these risks and, trying to be strategic and being able to satisfy both to an extent, the government as well as the community, and have a level of transparency about this, because that was, another thing that regarding privacy that they're looking to work on and improve on. And so people with experiences with the blockchain, obviously, but commerce with, the policies that are issued in local jurisdictions, and identity issues and so on. It's just someone who has a great understanding on the technical aspect, but also on the political and social aspects. And so they're getting these new people in, and I think they have like over I don't know where they publish the jobs, but over 24 blockchain related jobs right now. And they're going to be growing the team on Libra. And if you remember back over, was it Chain Space, they had got those people to be onboarded on their team. So yeah, they're trying to get high quality people to that can interpret all this information and create it from the ground up. But here's the problem, guys. Here's another thing that I found out as well, that Stella, imagine there's others, for those that said yes to join the Libra Association, there are others that said no. They did their research and looked at the fact that there's too much control. There's an incredible amount of control over users' financial transactions and data. And Libra Association is going to be like a monopolistic, it will move like a monopolistic entity. And you have all these interests of all these partners vying to get, advantages and power from this and influence. And so, companies and projects like MobileCoin, Stella, Tendermint, they've said no, they've turned it down because of these concerns. And good for them, because again, centralized companies and private companies like Facebook, if they didn't do a good job already with our data previously, what makes us think that they're going to do a better job with the financial data? I'm sure they get these concerns reported them on probably on a daily basis from different people all over the world, but it's just the way it's structured, guys. It's centralized. That already is a no-no for me. So trying to overcome that perception that the market has of them, and being able to be to play on the fact that it's going to help and serve so many people using their structure, using their influence to do good in the world, to make up for what they, messed up and whatnot, they're really going to be trying to push this hard and speak on how, on a human level, this is going to impact many lives. And sure, it will, but there will be a far more cost, a higher price to pay. The transparency, level of transparency, level of control is going to be terrible. So compared to other projects that others can invest in and other can use to, engage in transactions and have access to other things. So this is why, even with the issues with the government, I mean, taking a bit of with some voices, they're still having this hostile attitude towards our industry, but they still haven't got over, how Facebook has not only impacted in regards to the data manipulation and mining and whatnot, the Cambridge Analytica scandal, but also with the fact that foreigners, outsiders, Russia's meddling with the election, with the previous presidential election, and how Facebook, data was resold and whatnot, and the handling of it, and others that were able to breach and use that information to, stoke, increase fake news and stoke tensions within communities and drive, create more and more outrage and whatnot. This is definitely, it needs to be rectified, and I do believe there has to be on the Facebook front, certainly more regulations on them, just how they are built and how they've been moving. Regulating themselves hasn't worked, and I'm talking about Facebook. Crypto, on the other hand, is a completely different animal, different industry, and so them coming into our industry and trying to find a sweet spot, a middle ground for them to be able to be on the regulatory, be compliant and make the regulators happy, but also be able to, tap into the technology and leverage their own existing infrastructures and networks that they've created, the vast amount of accounts that they have access to, they can see and monitor and be able to create new avenues of money via the finding new ways to advertise to people and follow people. Man, it's just crazy, right? But then imagine injecting money into it, transactions into it. That's going to be another layer of concern, of major concern. Just the worst possible outcome from that is going to impact people a lot more, a lot more badly than, I'm not saying data invasion of privacy or data mining and selling and forwarding, never knowing where your information, how far it would have got, whose hands it's in now, isn't bad enough. But if you have funds, if you have most of your money, or you rely on a particular infrastructure to get you paid, and you need to use those funds to feed your family or do something, and you place reliance because of your loyalty to that, and especially in the developing world where the infrastructure still needs to be built up and whatnot, and so other traditional ways may be more, it'll be slower, it'll be more expensive. And so, really taking advantage and opportunities that lay in the developing world. It's great to be helping so many people out, but they could have done that without going via this route and having so many partners on board, and they could have made it more transparent. But this is a way for them, I feel, to mitigate some of the regulatory issues that they know they'll be up against. And so having others invested and be on board is really like having a team back for you as well, having a team to back you up. and if they're in some type of alliance, that they're going to be strengthened, their position, their arguments will be more, more authentic. And so, it's a smart thing for them, like survival wise, for them to be partnering up with others. But it's just a shame that the majority of these companies that they're partnered up with are also centralized in nature as well. So it's crazy. But anyway, we'll find out more once this hearing happens next July on the 16th by the U.S. Senate Committee on Banking, Housing and Urban Affairs. And then, they're going to ask them a set of questions in regards to specifically to Libra. So on top of, speaking of regulations, FATF, Financial Action Task Force, they had a meeting in Orlando this Friday gone, and they made it official. These new recommendations that they've mentioned, it has to be acted on within 12 months, 12 short months. And that is spooking and scaring a lot of these, exchanges, crypto exchanges, because if you remember, crypto in the first place was designed not to cooperate with the regulators and with traditional banking system. It's an alternative. It's not designed with total privacy in mind, like with the case of Bitcoin. It's decentralized, but you can still go on the blockchain and see certain transactions and whatnot. And there's other ways to be able to track who the account holder may be by using other evidences. But coins like Monero, for example, though, there's technology that's been created to make it virtually untraceable, and other as well, other projects, privacy-centered projects as well. But here's the thing, though. It's placing the burden and the responsibility on these exchanges to do all of the regulatory work. So to have the KYC aspect of it, the AML, anti-money laundering aspect. And for crypto exchanges, it's going to be a lot more difficult, a lot more expensive, because remember, then they're going to have to hire more people, change their systems, and create new infrastructure to be able to deal with all the extra work that requires with ensuring that their customers' details, records are there, and then to force them to communicate with other exchanges. So imagine millions of transactions happening at any given time. And so for every transaction, they're going to have to share, whether they're sending it to another wallet or exchange, they're going to have to divulge that information of that sender and also of the receiver, but more of the sender. They want to know their names, how much they're sending, the account number, even like physical geographical address, any other important information, national identity number, for example. So it depends from exchange to exchange how they're going to word and create that list for them to be compliant. But they would want more information on the person sending the money to the other person. The beneficiary, the one receiving it, they would want their name and account number. And so the fact that they're going to try and apply something that they did with the banks called the travel rule. So banks share information with one another about their customers, and they're trying to basically implement that on the crypto space, onto these exchanges. And so it would actually force a lot of these exchanges to increase their investment. Now, some people would think that's a great thing. There's security, reliability, transparency. That's going to be a great thing for the regulators to do their jobs. And really for them is to stop these being used as avenues for illicit, criminal activities, money laundering and all that. That's what they specialize in, money laundering, the FATF. So these recommendations, crypto was created not really to have identification requirements placed on it. It's for you to quickly send money from one place to another. And so what's going to end up happening is that this will actually force some customers to actually go to decentralized exchanges instead, going to peer-to-peer exchanges, one-on-one exchanges, directly dealing with the buyer and seller directly, no middleman. And the fact that this is their answer to this issue of how do we get ahead of the money laundering issues and all these other, trying to catch the bad people essentially and stopping them from using these infrastructures to get away and all that. They have to I believe they have to focus more on the existing infrastructure, because even money laundering issues is affecting banks, traditional banks. There's one or two that recently have been affected. They've been, look at the number of companies, banking institutions, major household names being fined. They've been fined for violating certain rules and provisions, going against the regulators as a few, and they only punish them with a fine. And they've been paying in the billions. These banks overall, cumulatively, they've been paying billions upon billions in fines. So they're getting away with stuff and not really tackling that adequately, And now they want to focus on us and, burdening these exchanges with this. If you have just a simple, quick way to verify information without having these exchanges have the burden of sharing information from one to another, because here's the thing, exchanges actually do cooperate with law enforcement. They do cooperate with police. If they wanted some information, they can easily give them. So if there's suspicious activity or whatnot, within the jurisdiction, they can actually say, hey, I want this information, can you give us divulge information? And they're actually happy to comply. They cooperate by and large. The problem is placing a legal burden to have these exchanges for every single transaction, get the person's identity, their date of birth, their this and that, where they live, where they, how much they're sending, what's the account number, what is it going to be used for, this, that, and other is just on a day-to-day basis, realistically, how you can make that work, and then the initial investment you have to make, and they have to find ways to recoup that. Even the experience for the investors, for the traders, they'll go elsewhere. If they find it too inconvenient, it's not that most people are trying to get away and they're trying to do illegal things. They're not. You have a lot of people doing it the correct way, but they just want the convenient and less fuss, and they want to be able to do this, do whatever they need to do, trade, accumulate, whatever the case is, to be able to do that with no faffing about, basically. And so the operations of these exchanges will be affected, their profitability will be affected, their reputation in a way will be affected, and others will be looking to go elsewhere if they just find the experience too burdensome for them. So definitely, as we get more and more regulations coming on board, coming to force, we're going to see more decentralized exchanges. We're going to see them be more popular. the use will increase, the awareness will increase. Certainly peer-to-peer exchanges will continue to flourish. And you're really going to be driving the market away. And this is why exchanges feel they're going to also lose out on business, is actually going to hurt their survival. And then some exchanges, as a result, may not even cooperate or decrease their transparency. And if you have others going elsewhere, then you're losing quality information as well. So it doesn't really make that much sense to exchanges to have all the burden placed on them to be compliant. But the FATF are absolutely certain this is the way, because it's simply about trying to get ahead of these criminals out there that are using different avenues. And as we get more into the digital space and we have an evolution of money, and all these virtual assets continue to flourish and increase, and service providers, exchanges and whatnot, they want them to be legitimate. They want them to be as transparent as possible and have the model that the banks used to be placed on them. I think they're basically copying a template that works for the banks but does not work for the crypto space. And it really actually makes you question whether they really truly understand what this industry is about. And a lot of that is to find ways to give back control to the consumer, in terms of its ease of use, speed, transaction costs being low. And these exchanges, I 100% agree, they do need to be more transparent, and find ways to be self-regulating and take a proactive approaches, without having to be forced to do certain things, because then that's going to perhaps be counterproductive. It may force them to rethink about opening up in certain jurisdictions, or they might have to tweak a few things. If they're forced to do it, they may have to. There's a price to pay if you want access to a certain market, just like Binance has done by opening up a US, going to have Binance US and banning US customers from Binance.com. This is a sacrifice that they're paying now so they can have larger market share in the States. And so whatever struggles initially that they go through, any problems, any loss of customers, or whatever the case may be, right now their strategy, their intention is to expand and increase market share and have more users on board, and truly have a global presence. And they can't have, strictly speaking, they can't be leaving out America, because I believe, 20% of all the Binance.com transactions used to come from America, still to a degree comes from America. And so that is now obviously going to change with the Binance US, also with the amount of coins that the alt projects that will have to be delisted or not being able to show up on the Binance US exchange due to regulatory concerns about it potentially being marked as a security by the SEC and causing Binance all sorts of regulatory issues, and also affecting its reputation and being able to do other things, and also the ability to get other customers on board. And so where we are right now with the FATF, they've been saying, we can't let this industry continue to proliferate in the way it is without some sort of accountability and ways to increase transparency and being able to get ahead of, as I said, of any dictators or terrorists or criminals, because that's the line that they're going by, is that there's many regimes out there that they could easily use these exchanges, crypto platforms, to be able to, never avoid going through the traditional routes where they can actually monitor them, crack down on them, surveil them. So it's really to do with it being more convenient for the FATF. I think it's really to do with convenience, and not really wanting to do it from the for what would work for the exchanges, for our industry. And so they've come up with that 12 months to implement it. Otherwise, there may be put in a grey list or even blacklist, and that other countries, other jurisdictions may be difficult for them to allow them to operate and whatnot, and work with these other exchanges if they're not compliant. And so that's the fact that they're going to add more. They're going to require these exchanges to ask for more information and submit more evidence and whatnot, and having to do that for every transactions and on both sides, both the beneficiary and the beneficiary. They only want to know their name and account number, but then the sender, they will hold they're the ones that have to comply the most with all of these extra provisions. So that's going to be annoying for some people, inconvenience, and they're legitimate. They're not doing anything wrong. They just want to be able to get in and get out, do their trades and quickly and conveniently, and not having the hassle of dealing with these extra things. But if they can find a way, with technology as well, they can find a way to make this as smooth and seamless as possible, so it doesn't feel much like a burden. There are ways to do that, and how they create these interfaces that are user-friendly and whatnot. That's going to take money, that's going to take time to build. And so I can really understand the frustrations of the exchanges, because they're just, right now getting, especially with the bull market now, they're really getting into, some of them have been around for years, some of them only months. And so being able to build up their base, it takes time, it takes investment and experience and whatnot. But this will just create all sorts of, concerns and all sorts of impact it will have, that it may end up hurting them rather than helping them overall. So we'll see how that plays out. And I think decentralized exchanges anyway is the way to go. But with this announcement with the FATF and more exchanges, looking to say, hey, I'm not dealing with America, I'm not dealing with jurisdictions and regulators that are going to make our lives more difficult, they'll go elsewhere and serve other markets, because it's a global aspect of it. So they're not going to run out of different customers to be on board and whatnot. Another thing I wanted to mention, speaking of exchanges, is Bitfinex and Efinex as well will be down for several hours. I think it's 6 or 7 hours this Wednesday, so 2 days from now. They're set to go offline for upgrades, and I'm just already thinking of all the different memes and messages and stuff around exchange. I'm not going to name names right now, but different projects and exchanges, scams that have gone. They've had an exit strategy where they're like, okay, I'm going to be down for an upgrade. We're going to be down for an upgrade for several hours and days or whatnot, and then suddenly they disappeared. Now that was prevalent in 2017 with we had so many scams at that time. But Bitfinex so far, I consider it still shady, but the Bitfinex so far has been keeping its word, has been, even with the whole Tether scandal, is still been there and operating, and anything can still happen. But I wouldn't recommend having, this is my personal opinion, you do what you want, but even if it's 7 hours, 7 days, 7 weeks, I personally would be taking my money out of Bitfinex. I wouldn't even be keeping that amount once I've used the platform to do whatever I needed to do. I would actually place it in cold storage. I wouldn't leave my cryptos on exchanges. So in my opinion, if you have any money, if you have any funds, coins on Bitfinex, I would recommend you to, have that placed elsewhere, transferred to cold storage, and just wait for them to be back online. Totally up to you again. I'm not telling you what to do, just my opinion. With Ethernex, Bitfinex, you during that time when the upgrade has been done, you cannot trade. Obviously, you can't even view or access your wallets at that time. Because they need to change the structure of it and the programming and whatnot. It completely needs to be paused. So this is to increase the scalability, the stability of it, and increase the scalability of the machine, the matching index, the Ifinex matching index. And so, it's getting ready as well to launch derivatives trading on the platform. And so it needs, there's no two ways about it. And I do, even with other companies, other exchanges, you do have moments when it's down, like even with Binance, it had to go down for a few hours and days in order to upgrade and get better, and no problems there. All the funds will be safe. According to them, it will be unaffected during the platform upgrade. Obviously no trades can be taken and whatnot. So if you do have an open order though at that time, it will be kept exactly how you left it. It just obviously won't be executed, so it won't be sold off, it won't be shut down, it won't be closed. So these orders will not be liquidated during that time. But here's another thing, they mentioned it's Wednesday, but depending on how volatile it is, or if there's any other factors affecting it, they could postpone the upgrade, they could delay that to another day, another week perhaps. As soon as it's done, and within 5 minutes, as soon as the Bitfinex is up and running, you can trade again, you can deposit and use it as normal. Again, I just have a bad taste in my mouth with Bitfinex and Tether because of the issues that they've been having, and they weren't clear with, they weren't open with the community regarding their reserves. I mean, it was just 74% that they had to be able to back on a one-to-one level with the US dollar. And so since then, even beforehand, we saw, the accusations in terms of the Bitcoin manipulation that happened during the parabolic run that we saw in 2017. But ever since then, and we're seeing all these exchanges either be hacked or sabotaged from the inside, or any number of things happening, and also exit scams that say they're going to, get upgraded, they're going to change their systems and whatnot, and then, never to be heard of again. Or it could be like there could be another issue internally happening that they do not want to know, and they want to be able to use that as a reason to, have a downtime, to hide from something else, and then come back online as normal. But they might want to be using because they potentially spotted a bug, or it could be any number of things. But it's always to be, it just reminds me, always to be precaution, always to think from the worst case scenario, but just without stressing yourself, just be prepared. And it's common sense as well. I mean, having it doesn't make sense even during these upgrades where anything can happen. What if they introduced a wrong code, a bad code? What if there's a vulnerability there that they're realizing? In fact, those few days, the 7 hours would have to be then increased to a day, 2 days, a week. Are you sure you'd be able to not drive yourself crazy knowing that you've left certain amount of cryptos on the exchange? Even if it's completely innocent, they're completely, upgrading as they say. Are you personally going to be happy and at peace and comfortable knowing that you've left whatever amount of funds, whatever coins you have there? And ever since as well with Cryptopia's issues as well, I've been like, okay, we definitely need to preach again and again that, exchanges, having your funds on exchanges and leaving it there for whatever amount of time, it really is still a risk that you're taking. It's not 100% yours until the coins, until the private keys, until it's in your cold storage, until it's in your hardware wallet, and that it's safe from anyone else accessing it or access is so important to, even if you have the best exchanges in the world, any number of things can impact the access. So if if it's down for any reason, or there's a hack, your ability to get access to your money is everything in this space. So, if there's mechanisms where, the insurance also, on the contingency planning and the insurance, you don't know how long, if there's a hack, you don't know how long it'll take for you to be reimbursed. It could be days, weeks. If they go for a court process, it may be months and maybe years. You don't know. So learning the lessons from other exchanges and whether they're legitimate upgrades or otherwise, it's important to just be extremely diligent. And if you're happy to leave your coins there, not a problem. It doesn't matter what I say or other people say. If you feel comfortable with taking that risk, that is all that matters. That, if it's like something like $10 or $100 worth, you don't mind, and you're cool with that, that's cool. If it's $10,000 in there, you may want to think twice. You may be like, okay, maybe I should take half at least, and put it in a cold storage, or 75% of it. Just for the convenience, you may want to leave some there, and that you trust the exchange. But there's a saying in this industry, don't trust, verify, right? And it just reminds me of that, making sure that, it's just best to have as much control over things as you can in this space. And there's only so many things that we can do to have total control, but one of them is private keys, one of them is access. So that's why I wanted to mention that, because it's in a couple of days' time. So anyone that has money on Bitfinex, just wanted to give you a heads up on that. So with that being said, I am gonna call it a day and give you a bit of an update. Let's see what's happening with let me see what's going on with Bitcoin. So yeah, okay, so if it continues to hold above 11,000, great stuff. If we do have another midterm correction, I definitely see it going down at least to test 10K again, potentially even as low as 7K, guys, $7,000 with Bitcoin. So we may even see it range and consolidate, but it's clear that even with the fears that there might be another retracement anywhere between 20 to 40%, it's clear the momentum is currently with the bulls, and that they're gearing up right now to make another push, perhaps to the upside, perhaps testing 11,500, guys. So that's the next area that we're looking at resistance wise, and setting a new record for the year. If it cannot hold above 11,000, I definitely see 10,000 being tested, and below that, as low as 7,000. From what I'm seeing, at least on the charts, my analysis. So yeah, with that being said, guys, have a fantastic weekend. And yeah, try and stay calm as much as you can, because there's still a lot of work. There's still a lot of progress that Bitcoin's going to. The whole space is still on. But I definitely want to see a correction, guys. Me personally, I definitely want to see that healthy retracement. And if we can ever get to 6K again, 6K would be the sweet spot. It would be a beautiful pullback, beautiful opportunity to accumulate. And yeah, 6,000 is the magic number as far as I'm concerned. If it's ever gonna look to create another test to the downside, 6K would be perfect. But I think realistically, 8,000, 7,700, 7,500, as low as 7,000. I think 7,000 is still realistic, in my opinion. But it's going to be hard, guys, because I think institutional money. Oh, here's another thing I forgot to mention, is that you would think institutional players would want to dump on the market, shake out weaker hands, accumulate their cryptos, and try and drive the price down. And there's been a history. If you look at the cycles, previous cycles, whales actually have extended them. They prolonged these market cycles before. So if they wanted to do the same thing here, they could. But here's the problem. Here's the dilemma that they're facing now, with all these renewed interest and momentum and infrastructure that's been built. They are encountering supply problems. They are, and this has been the case, especially in the beginning of this year onwards. Since Bitcoin's price hit 3,100, and that particular time, November, December, the stats will show you that's the amount, the largest amount the whales have been accumulating. They are scared that if they push the market down to previous lows, that retail traders, your mom and pop traders, other institutional players, their competition, basically, miners, you name it, anyone, if they see prices go down that low again, this time they're going to be buying up the dip and not folding, not letting those coins go as easy as before, because the situation is different now from 2017. And the rate of adoption has increased, the rate of transactions have increased. A lot of metrics show already this is a far more developed industry, and so a lot more attention and scrutiny is placed on this market and the participants. But this time, they're really worried that they're not going to get part of the supply back that they've instigated themselves. They're not going to be able to get as much as possible, because others will be, market makers will be facing more competition. And this time you'd have a lot more people accumulating and not willing to give up their Bitcoin so easily, rather than what previously happened in 2017 and with the bear market last year. So it's like more people will be this time looking to just hold and never fold, basically. That we're going to get a percentage of hodlers, permanent hodlers, that will be in the market at that point. And that's their real concern, is that once it goes down to that point, will they be able to accumulate as much as they want to? And they're seeing it in the numbers. If they're having difficulty enough right now trying to get supply with Bitcoin over the years, with the halvening the event happening where the blockchain, the block reward get cut in half, with that coming next year as well, they're really concerned that, people, because believe it or not, I think it was Grayscale that did their research and found even their investors, surprisingly, a large number still weren't aware of the Bitcoin halving event due next May 2020, right? So they're really worried that, they're going to end up hurting themselves if they dump on the market, and other people, more percentage of retail traders and other institutions, other players in the market be able to grab money that they would be bitcoins that they would have been able to get easily at a large amount of volume than now. So this is why I think they'll be reluctant to take it below 6K, 5K, 4K, even to 3K. I doubt that they're going to want to do that this time. It is potentially plausible to have Bitcoin go up, make new all-time highs, perhaps push it to $60,000, and then dump on the market. And then, we'd see a massive correction, perhaps going back down to test 10K, 20K at that point. And that way they could accumulate more coins, but we'll see what happens, because there's still a great deal of, people underestimate the bears and what they can do. And remember, it's still, we still haven't seen enough retail FOMO, guys. It actually has been, some of it has been institutional players, creating, using news as catalysts to push up prices. And these buyers have been eating it up, basically. They've been falling into that. And so there's a strong bullish momentum going into it, but never discount the fears. And we've seen time and time again, whenever we get to a point, especially when we get to euphoria stage, people quickly forget all the bad times, all the things that they had to go through, and forget that there's going to be eventually a price to pay. There's going to be a correction without a healthy retracement or pullback on the way up. So this is more people are aware of this fact, and there will be a level of reluctance on the institutional players. They're, concerned with getting supply reduced, and they would be the instigators of that. So but something has to happen before the Bitcoin halving in next year, where prices already part of the increase that we've been seeing is people accumulating Bitcoins. But as you've been seeing with Litecoin as well, that halving is coming up in August, which is just a couple of months away, a month and a bit away. Litecoin's been doing extremely well, just based off of that development, that expectation. And so, there's going to be so many tactics that whales can use to trap both bulls and bears, and create false sense of momentum and whatnot. But yeah, right now it's a bull's market, but don't underestimate. That's what I'm saying. Don't underestimate the ability for the bears to, want to take this market down, so others can accumulate and short the market down until 6K. That would be at this point it would be amazing if we ever see that again. But I would think 8K, 7K. Far more realistic than 6 or 5K, because of the interests. Some institutional players will fight. Some exchanges as well will fight to try and keep supply, to try and not dry up the supply, basically, because that's going to be problematic moving forward. So more and more people will be exposed to this, more people will want to accumulate. So any pullbacks that you get, guys, don't be trying to guess the market and think, I'm going to wait until, it pulls back to 0, pulls back to 3,000, pulls back to this. That's not necessarily a good strategy, a sound strategy, in my opinion. whenever an opportunity presents itself with these pullbacks and corrections, to be able to accumulate healthily, dollar cost average, that is the best way in order to have your peace and sense of, sanity with you, because it is going to remain wild in this market where we are right now. And as I said before, in 2017, from 10K to 20K, it only took 16 days. In this market, it is also potentially, possible that we could see 20K a run up to, I'm saying 11K first. Excuse me, 11.5K is a resistance that we need to watch for. And then 13,000 after that, 13.3. And then it's possible that it could just like fly, literally little resistance from that point, and take us to 20K potentially within a few, at least a month, or I wouldn't say 16 days. I still think that it does have to prove itself a little bit more price-wise, but I think there will be some level of correction and retracement that has to happen on the 13K aspect, definitely. But I don't see how it's going to, crack 20K within 16 days at this cycle. But it's possible. Don't take my word for it. We've seen what happened just this weekend alone. It's really bullish right now, but I just don't underestimate the whales. I don't underestimate the bears. I don't underestimate the ability for the market to use any catalyst, any news out there to be able to create, these false moves and be able to take down sellers via short squeezes and liquidate their positions and trap buyers as well. And so just, whatever you're doing, if you're trading, you have your setups that you need to look for and your strategies in place. And if you're a hodler, if you're a long-term investor, you want to be able to dollar cost average and get in at these pullbacks and accumulate as and when you can consistently. And as a miner, you're definitely looking forward to this run up to the halvening event. Obviously, you're not going to like the fact that you're receiving less this time after May 2020, when the block reward gets halved by 50%. But there's mechanisms to help you find ways to make money. You'll be dependent on transaction fees, for example. But even miners are stacking up on Bitcoins. They're less likely to be selling off their Bitcoins coming up to what's about to happen. So, and we're in a bull market now. So miners will be any opportunities to accumulate dollar cost average. They're doing that too. And they're looking back at historical precedents and seeing, okay, at each halving, price tends to go up and stay up. It tends to continue to move upwards, and it has. So they are making these calculations too. So this is why institutional investors are concerned about the supply. They're concerned about the tactics that they need to use to be able to get enough for themselves and to be able to find ways that they can trap these retail traders time and time again, so they can accumulate their Bitcoins. That's really their end game. Try and get as many of the BTCs as possible, and then create their own fee generation model, so they can continuously have a reliable source of income that comes in, and they're probably going to use that to accumulate even more Bitcoins too. So there's going to be all manner of things, all types of markets and networks and platforms that pop up, and accepting Bitcoin as a form of payment, and being able to trade Bitcoin, being able to do things with financialize, have Bitcoin related products and services, and they're going to be riding that wave, guys. And end goal is really to accumulate, just like us, accumulate as many Bitcoins as possible, and to be able to run the onboard, the bridge, the gateways, to be able to build as many of them as possible so they can generate, diversify their strategies and whatnot, diversify their portfolios, all these mutual funds, all these 401ks that will start being, they'll be able to invest in cryptos and stuff. All these millennials, looking to eventually have a percentage of their portfolio go into cryptos and whatnot. Depends on their risk profile, whether they're conservative or aggressive and whatnot. So there's a massive changes going on, and where we are right now in the market, still volatile, but over time it will the volatility will decrease as more participants, as it becomes more legalized, more formal. I said legalized. It's more legitimate is the word I was looking for. It's already legitimate to us, but in new players that come in the market, the more they see other brands, other household names, other banks, other high net worth individuals and celebrities, and even their friends, family, colleagues get involved, the more accepting there will be, and the more we see the rate of adoption rise, and the general acceptance rise, and the integration of these networks and ecosystems rise as well. So all in all, right now, do expect more of the same, which is more surprises from Bitcoin, more surprises from cryptos. Do expect more regulatory, details to come out. We have several announcements that we're waiting for over the next few months. For now, I want to see a healthy retracement. I want to see it correct down to at least in the short term, 10,000. I would love for price to go back and test that. I think it came close. I did see on one of my charts it went to 10,300 and then it bounced back real quick. But yeah, 10,000 being tested. If it breaks 10,000, I'd love it to go to 8,000. If it goes to the upside, it's going to be quite quick. I think 11,500. It will break that just as easily as it broke 10,000 once it gets to that level, and then 12,000 will be. I doubt that 12,000 will be that strong, and then 13,300 will be the area to watch after that. So, with that being said, I definitely got to go and enjoy your week. And hopefully by next Friday, I don't know what's going to happen, whether at that point we're speaking on $8,000 Bitcoin or $13,000 Bitcoin. And more so than not right now, the momentum is with the bulls, the volumes, the, transactions right now. So yeah, I think it'll face a bit of resistance, but they still have the momentum. So I think we're going to be, hopefully on Friday, we'll have some another new record for me to mention, but I'm also not discounting these bears at all. So I would personally love it to go down so we can accumulate. But yeah, with that being said, I definitely gotta go. So have a fantastic week. I said this like 3 times now, but I'm definitely gonna go. So take care, have a great week, and I'll see you on Friday. Cheers.